Welcome back. Now, Statistics South Africa has released the latest gross domestic product or GDP figures, which increased at an annualized rate of 66.1% in the third quarter of 2020. The increase results from the easing of COVID-19 lockdown restrictions in the period July to September 2020 is what we are currently depicting. Now, the 13.5% increase in economic growth follows a deep contraction of 16.2% in the second quarter of this year. However, the economy is by no means out of the woods yet, and the unemployment rate still stands at a whopping 30.1%. Now, should we be cautiously optimistic about these GDP figures? Let's discuss this with Azar Jammine, who's a chief economist at Econometrix. Azar, good morning. Welcome to Morning Live.
Thank you very much. Good morning to you, Sakina, and good morning to the viewers.
Azar, perhaps we could just start by breaking down what these latest figures mean, because there seems to be some confusion surrounding the 61.1% increase in the third quarter. So how should we read this? What should we make of it?
Essentially, what we're talking about is the fact that the economy contracted in devastating manner in the second quarter as a result of lockdown levels 5 and 4. But then, as we moved to lockdown levels 3 in June and then to lockdown level 2 in August, we saw a progressive improvement in the level of economic activity. You only need to look around and see how much more traffic there is now than there was a few months ago to realize that this is actually happening. But nonetheless, you should not believe that this dramatic recovery in growth that we've seen in the third quarter means that the economy is growing beautifully again. The fact is that on these quarter-on-quarter annualized statistics, when they are very big movements down and then upwards, tend to distort the picture of what is really happening in the economy. A far better gauge is to look at what happened this same quarter this year versus the same quarter last year. And in that regard, even though in the second quarter we were down 17.5% year on year, we now find in the third quarter we were still down by 6%. That's better than we had expected, but it still means that the overall level of economic activity was still 6% short of where it was prior to the onset of the COVID-19 virus. And then it's also important to realize that even in the third quarter of 2019, we already had a recession in place. So the 6%, minus 6% that we're seeing for the third quarter of 2020 is versus a figure a year ago that was already very weak. And we need to then start questioning whether we've done enough to see our economic growth restored to levels way in excess of what was prevailing prior to the COVID-19 virus, which itself was extremely weak at the time.
And speaking to that question of have we done enough, Azar, many people grappling with that question. What do you think could have been done? What more could government and, of course, the private sector as well have done better?
The one thing that in retrospect I think we could have done better is refrained from locking the economy down quite as severely as we did back in April. I know that the common wisdom is that, that prevented South Africa from ending up with the same kind of level of infections that we've seen in other countries. But, the explosion of infections back in June and July was in any case quite dramatic. And at one point South Africa did, despite the stringency of the lockdowns, have the 5th highest number of infections. The rest of the world has failed since then, and we are now down to 18th. But, even then, we have to see that in relation to the fact that we have the 25th highest population in the world. So we still have not done as well in quelling the spread of the virus as may appear to be the case. And at the cost of an enormous amount of economic activity. I think if we'd started off with the lockdowns kind of with a much milder form of lockdown, we would have done less damage to the economy and probably been as successful in quelling the virus as we have been lately.
So right now, we are faced with a situation whereby we're seeing that uptick in COVID-19 infections once more, and doubts creeping in about perhaps further lockdown restrictions, as we've seen imposed in Nelson Mandela Bay. We know Dr. Zweli Mkhize is going to the Sarah Baartman district today again, and because those numbers are ticking up. Now, you've just spoken about the hard lockdown and the detrimental impact that it's had on the economy. What do we do?
Well,
how do we balance those two things, Azar?
Well, I think what we've done in Nelson Mandela Bay is precisely the correct thing. And that will not kill off the economy of Nelson Mandela Bay. Just having a curfew from 10 to 4 and clamping down on liquor sales to some extent, that will assist in stopping people from having big parties. What baffles me is why, with evidence growing of a spread of a new spread of the virus, especially in the Western Cape and the Garden Route, why the restrictions that were imposed, the relatively modest restrictions imposed in Nelson Mandela Bay, were not extended to the rest of the Western Cape and especially the Garden Route, and for that matter to the rest of the country, because we are now starting to see a spike in the spread of the virus in KwaZulu-Natal. Or alternatively, why did the government not just ban matric rage parties, which are at the core of the spread of the virus right now?
And then, Azar, just looking at the impact of the devastation of the economy at the moment, no doubt that the easing of those lockdown regulations did help somewhat, but for someone who has lost their means of attaining an income, be it a worker or even a business owner, this number, in all honesty, probably means nothing. We still have an unemployment rate that's at 30.1%. What's there to be optimistic about at the moment, if anything at all?
Firstly, I think there is something to be said for the fact that the strength of the figures in the third quarter are a reflection to some extent of the measures that were taken to alleviate the pain of people afflicted by the ravages of the coronavirus and the lockdowns. The one thing that one should not forget is that people's debt servicing costs have come down by 30%, with prime rate having fallen from 10% to 7% over the course of the year. Secondly, the temporary employee relief scheme introduced for those who may have lost jobs or had salary cuts. Yes, I think that played a role. The rollout of additional social grants to those who were without jobs but could not access the conventional social grants, that also helped. The interest payment holidays provided by banks was also substantial. But yes, all of those helped the third quarter figures and certainly have provided some relief. But, and this is the big question, all this will come to naught in a year's time once the effects of all those relief packages die down, if we don't restructure the economy to tackle issues such as corruption and state capture, the weak state of state-owned enterprises, the highly concentrated nature of our business environment, which is squeezing out small business activity, the poor levels of education, and the very weak success that we've had in terms of implementing infrastructural investment programs. Even these latest figures, at the core of the 66% improvement, was a 69% improvement in consumption, but a mere 25% improvement in investment. If we keep on consuming more rather than investing in the longer-term future to produce the goods and services that are needed, we will not see a return to the kind of growth that is needed to alleviate the unemployment problem. So yes, this third quarter figure is good, and 2021's figures will reflect a bounce back in growth off a very low base. But if we don't modify our structural weaknesses, then by 2022 we'll be back again at growth rates of no more than 0 or 1%, and unemployment gradually creeping upwards even still further.
So there are those who say that there's nothing new here. there's nothing to see here, and that people like yourself, perhaps Azar, who are optimistic, are delusional, because all the things you mentioned, COVID-19 pandemic aside, were there before the advent of the pandemic, and we've struggled. We haven't been able to address any of those issues prior to the pandemic. What's going to change now? When you talk about restructuring the economy, how? Where do we start?
Well, there have been certain steps taken by the government in recent months that do provide quite a lot of encouragement. Certainly, the judicial action against people accused of corrupt activities has ramped up somewhat. The introduction of independent power producers to compete with Eskom on the electricity price front, the rollout of broadband spectrum, the announcement of 51 specific infrastructural investment projects by the government, the announcement by President Ramaphosa in his reconstruction and recovery plan that the government would contemplate getting strategic equity partners to help solve the SOE problem. All these are positive moves, but there are those who are very skeptical and say, we've heard that all before. Let us wait to see the implementation before we get too excited. And that's, I think, where it lies. And herein lie the importance of these factional battles within the ANC that suggest that there are sections within the party that are vehemently opposed to some of these structural reforms and are impeding the path of the president to actually implement this recovery plan. If you believe that the latter is going to hold sway, then yes, there is very little hope we're going to carry on sliding. If you believe that the president will exert his authority and succeed with the implementation of a turnaround strategy, then there is a bit of hope. But I can't say at this stage definitively which way we're going to go.
But how do you locate the president, who is also the president of the ANC, outside of ANC policy, Azar? Because what is being implemented is ANC resolutions, ANC policy. So when you say that if the president has his way and there are those who would be opposed to that, please break that down for us in terms of how the politics then is impeding our economic development at the moment.
Political interests are trying to extend their influence in such a way as to persuade certain ideologies to gain ground. The ANC is torn between those who believe in market-oriented policies, that what the marketplace dictates, what credit ratings agencies are calling for, what the likes of multilateral institutions such as the IMF and the World Bank are calling for in terms of correcting our fiscal deterioration through, for example, a wage freeze for public servants. That is being opposed vehemently by the ANC's tripartite partners such as COSATU and the SACP, who say, why should they be the ones to suffer when all this largesse in state capture that has benefited just a handful of people is really at fault? And it's trying to sort out those battles, ideological battles, that are absolutely critical. And then a very fundamental one, which I don't know if you're covering it on your news, but the news that South Africa's grade 5s and grade 9s have failed dismally in terms of the readiness to understand mathematics and science. I mean, that goes to the very heart of the decline of the South African economy. The majority of people are just not equipped enough to deal with the technologically developing fourth industrial revolution economy. And so more and more of them are unable to add value in the economy because they are just insufficiently qualified and educated to do so, and they end up being unemployed as a consequence. Unless we deal with those issues and they cut across the ideological divides within the ruling party, we are going to struggle to get this economy right.
And your views on that school of thought that says the neoliberal approach has failed, that says that government needs to spend more rather than adopt austerity measures at a time like this. What's your view on that?
You know, I suppose I am classified by the left as a neoliberal economist, and therefore I have to say that they don't understand the disaster that would face us, far worse than even what we have been having, if they went the route of massive spending and helping and funding that through basically printing money. We would end up in the same way as Zimbabwe, Venezuela and Argentina. Those are the classical three that we have alternatives, where inflation would soar ahead, and during a time of higher inflation, it's the poor that suffer most because they don't know how to protect themselves like the rich by investing in an appropriate manner to protect themselves against inflation. The poor can't do that, and so they suffer, and inequality just gets exacerbated in such an environment.
But we are where we are because of neoliberalism, and you yourself tacitly admitted that right now. So if we look at where we are, where we're trying to get to, we look at the net loss of job opportunities, roughly estimated at 1.7 million people, Azar. How do we get ourselves out of this quagmire? Because it cannot be business as usual. We can't keep doing what we've been doing.
That's why I mentioned the educational sphere, because until such time as we improve the educational outcomes of the majority of people, more and more people will not be able to functionally add value to the economy, to be able to earn enough to be able to reduce inequality. If you look at the success story of East Asia, it was driven by a passionate drive on the part of their governments to educate their workforces as rapidly as possible and in the right areas, to the extent that many of those economies are now overtaking Western economies where neoliberal values still reside. So it's not a case of just neoliberalism versus non-neoliberalism. It's a case of, from the grassroots, actually developing people's human capacity to be more productive and to add value to the economy. And we are just not doing that. The majority of people, getting more and more government involvement is a recipe for getting people just to depend on government handouts to an increasing degree to sort things out. And that's what is happening right now. More and more people are waiting for social grants and handouts of cash to survive because they haven't got the human capacity to actually develop businesses of their own and careers of their own through the way in which they've been educated. And that doesn't mean just the school system, it also means vocational education that is sadly lacking in this country.
And then, Azar, just very quickly, how do we digest the figures of the individual sectors that have shown increases in productive activity? You have manufacturing, for example, 210.2%, mining, 288.3%, trade, 137%. And of course, we know that this is against a backdrop of that hard lockdown that we experienced in the earlier part of the year. But how should we digest all of this?
Firstly, there is a mathematical conundrum here, and that is when you see a contraction, the most you can contract by is 100%. When you see an expansion, proportionately, the sky's the limit, 1,000%. You go down from 100 to 1, that's a 99% contraction. You go up from 1 to 100, that's a 100,000% improvement. So that's the first thing. Those sectors that posted the biggest improvements were the very sectors that suffered most through the original lockdown. The likes of mining and manufacturing contracted by 50% during lockdown. Retail and tourism, similar extent. And so they were the ones that recovered proportionately most when the economy recovered. The financial sector, for example, did not contract anywhere near to the same extent during the second quarter. Business activity in banking and stock market and that kind of thing fell by only 15% and then recovered by 15% in the third quarter. So it really is, a lot of this is mathematical and statistically oriented. And as I say, the best way of looking at it is that on a year-on-year basis, we had a 17.5% contraction in the second quarter and just a 6% contraction in the third quarter. But the fact is that in the third quarter, we still had a 6% contraction year-on-year, which meant that the economy is still a lot smaller than it was prior to the COVID-19 crisis, but it's at least a lot better than it was during the really hard period of the lockdown. That's still not going to provide all the jobs that we need, but at least there has been some alleviation of desperation through cut in interest rates and various relief packages that have been introduced. But the problem is that the effects thereof are going to gradually die away over time, and unless they are accompanied by massive structural changes in the economy, which we're calling for the government to introduce, but around which there's a lot of skepticism whether the government has the wherewithal to introduce those structural reforms.
Azar Jammine, thanks so much for your time. Chief Economist at Econometrix, discussing South Africa's latest gross domestic product figures as of the third quarter of 2020. Time now for your latest news.